Welcome back to BullionIQ, the place where we break down crypto finance and digital assets in a way that actually makes sense. If you're here because you hold XRP, are thinking about XRP, or just want to understand where you really stand in this market, you're in the right place. Today's video is important because it's not about hype, price predictions, or flashy numbers. It's about perspective. And once you see the full picture, the way you look at your own XRP holdings may change completely. Imagine this for a moment. You're sitting inside a huge stadium packed with 80,000 people. Everyone is loud, excited, and you feel like just another face in the crowd. Then someone leans over and quietly tells you something shocking. Everyone in this entire stadium combined doesn't even hold as much XRP as you do. That single sentence would instantly flip how you see yourself. Suddenly, you're not small anymore. You're not late. You're not behind. You're early, and you're positioned in a way most people can't even imagine. This is exactly where many XRP holders are today, even if they don't realize it. Most people scroll through social media, see massive whale wallets holding millions of XRP, and instantly feel insignificant. They compare their few thousand coins to numbers that seem unreachable. That comparison creates doubt, fear, and impatience. But what most people don't understand is that they're comparing themselves to wallets that don't represent real individuals at all. Every single day I get messages from people saying the same thing. They tell me they only have a few thousand XRP and ask if they're already too late. They worry they missed the opportunity. The truth is the complete opposite. Those people are not late. They are ahead of the vast majority of the world, and today I want to explain why that matters. When you hear about XRP whales, what you're usually seeing are exchange wallets, institutional custodians, market makers, automated liquidity systems, and operational accounts. These wallets are designed to move funds, provide liquidity, and support infrastructure. They are not everyday investors holding XRP for long-term personal wealth. When you filter out this noise and focus only on real human holders, the entire distribution changes in a way that surprises almost everyone. Right now, there are millions of XRP wallets globally, and on the surface, that sounds like mass adoption. But most of those wallets are empty or hold tiny dust amounts that don't represent serious positions. When you look deeper, only a small fraction of wallets actually hold meaningful XRP balances. That means the competition people think they're facing doesn't really exist. This is where mindset becomes critical. If you keep comparing yourself to non-human wallets, you'll always feel behind. But when you compare yourself to real individuals across the world, you start to realize how rare your position actually is. You're not chasing the crowd. You're standing far ahead of it, even if the price hasn't reflected that yet. Another mistake many holders make is thinking that size alone determines success. In reality, timing, patience, and self-custody matter far more. History has shown us again and again that people who were early often sold too soon because they underestimated their position. They felt small, bored, or uncertain during the quiet years. Later, they realized they were sitting on something transformational. This channel exists to help you avoid that mistake. At BullionIQ, we don't focus on daily price noise or emotional reactions. We focus on structure, distribution, utility, and long-term positioning. XRP is not built to be a meme coin. It's built as financial infrastructure. And infrastructure assets behave very differently from speculative plays, especially in the early stages. What's happening right now is a slow, quiet build. Partnerships are forming, systems are being tested, regulations are aligning. None of this creates daily excitement, but all of it lays the foundation for real usage. Most people lose patience during this phase and walk away right before things get interesting. If you're holding XRP today, you're already part of a very small group globally. Even if your bag doesn't look impressive to you yet, it may be far more significant than you think. The goal of this video is to help you zoom out, remove emotional comparisons, and see where you actually stand in the bigger picture. By the end of this breakdown, you'll understand why feeling small is often an illusion, why the rich list is misunderstood, and why many XRP holders are far earlier than they believe. This isn't about promises or guarantees. It's about clarity, data, and mindset. And once you have that, doubt starts to fade. When you hear that there are millions of XRP wallets worldwide, it sounds like everyone is already involved. It feels crowded, like the opportunity is gone. But that headline number hides the truth. Most XRP wallets are either empty or hold extremely small amounts that don't represent serious participation. When you strip that away, the real picture looks very different. Right now, there are roughly over 7 million XRP wallets globally. On the surface, that sounds massive, but the majority of those wallets hold almost nothing. Many were created years ago and abandoned. Some were made just to test transactions. Others hold dust amounts that are functionally irrelevant. These wallets inflate the numbers and create the illusion of widespread ownership. When you focus only on wallets that hold a meaningful amount of XRP, the number collapses quickly. Only a small fraction of wallets actually hold enough XRP to matter in terms of long-term positioning. This is where the idea of the XRP rich list becomes powerful, not as an ego boost, but as a reality check. For example, holding just over 2,000 XRP already places you ahead of the vast majority of wallets worldwide. Let that sink in for a moment. People who panic with 2,000 or 3,000 XRP often believe they are late. In reality, they are already ahead of millions of wallets globally. That's not hype, that's math. This happens because wealth and assets are never distributed evenly. In every financial system, a small percentage holds a large portion, while the majority holds very little or nothing. Crypto is no different. XRP is no different. The difference is that many of the largest XRP wallets are not individuals at all. Exchanges alone hold enormous amounts of XRP on behalf of millions of users. One exchange wallet might represent hundreds of thousands of people combined. Institutional custodians hold XRP for banks, funds, and payment providers. Market makers hold XRP to provide liquidity, not to speculate. These wallets appear massive on the rich list, but they don't belong to a single person trying to build personal wealth. When people compare their personal wallet to those addresses, they're comparing apples to machines. That comparison is unfair and misleading. Once you remove those operational wallets from the picture, the number of real human holders with large amounts of XRP becomes surprisingly small. This is why so many holders feel behind when they're actually early. They see screenshots of million XRP wallets and assume they missed their chance. They don't realize those wallets exist to keep the system running. They are part of the plumbing, not the competition. Now think about this on a global scale. There are over 8 billion people on the planet. Out of that entire population, only a tiny fraction holds any XRP at all. An even smaller fraction holds a meaningful amount. That means even modest XRP holdings today place someone in a very exclusive group worldwide. Another layer people often miss is the fact that serious holders don't usually keep everything in one wallet. For security and privacy reasons, long-term holders often split their XRP across multiple addresses. One individual might control 5, 10, or even 20 wallets. On the blockchain, that looks like many holders, but in reality, it's just one person being careful. This further reduces the number of actual humans at higher levels of XRP ownership. The rich list counts addresses, not people. Once you understand that difference, your perspective shifts fast. The club of real, well-positioned XRP holders is much smaller than most assume. This explains why doubt spreads so easily. People judge their progress based on incomplete information. They think they're late because price hasn't exploded yet. They think they're small because they see giant wallets. But price action and wallet sizes don't tell the full story during an infrastructure build phase. This phase is not about excitement, it's about positioning. It's about holding an asset designed to move value efficiently while the world slowly upgrades its financial systems. That process doesn't happen overnight, and it doesn't create constant headlines. Many people expect crypto to behave like a casino, fast pumps and instant gratification. Infrastructure assets don't behave that way. They move slowly, quietly, and then suddenly become essential. By the time everyone agrees they matter, access is tighter and prices reflect real demand, not speculation. The danger is selling too early because you misunderstood your position. History is full of people who held something valuable before it was obvious and let it go because it felt boring or uncertain. They didn't realize how few people were actually positioned alongside them. Understanding the distribution is how you avoid that mistake. It helps you stop comparing yourself to non-human wallets. It helps you stop feeling late when you're not. It shifts your mindset from short-term price watching to long-term ownership. Once you move past the lower tiers, the gap between perception and reality gets even wider. Most people think you need an insane amount of XRP to be considered early or well-positioned. In truth, the thresholds are much lower than most expect. When you look at the top 5% of XRP wallets, the amount required is far less than what people imagine. Holding around 8,000 XRP already places a wallet ahead of roughly 95% of all XRP addresses. That means out of millions of wallets, only a small slice holds more than that. Yet many people with this amount still feel behind because they compare themselves to wallets holding hundreds of thousands or millions. Again, this is where context matters. Those massive wallets are not individuals waking up every day wondering if they should sell or hold. They are exchanges, liquidity providers, institutional desks, and automated systems designed to keep markets functioning. They are not measuring success the same way a personal investor is. They are part of the infrastructure. What's more interesting is what happens when you remove those non-human wallets from the equation. The number of real individuals holding 8,000 XRP or more drops sharply. And when you go higher, the drop becomes dramatic. Consider the level of 10,000 XRP. On paper, a few 100,000 wallets may appear to hold that much or more. But once you account for exchanges, custodians, bots, and liquidity pools, the The number of actual humans controlling that level of XRP is far smaller. Many estimates suggest it could be closer to a few tens of thousands worldwide. That's not a typo. Tens of thousands of people on a planet of billions. That group wouldn't even fill a large stadium. Yet these are the individuals holding meaningful positions in an asset designed for global settlement and cross-border value transfer. Another important factor is wallet behavior. Long-term holders rarely keep everything in one place. Security, privacy, and risk management all push people to spread holdings across multiple wallets. One person might appear as several wallets on the rich list, so even those already small numbers are likely overstated when counting actual humans. This means the higher you go on the list, the more exclusive it becomes. Not because of hype or marketing, but because very few people had the patience, conviction, and understanding to accumulate and hold through years of uncertainty. Now think about how this affects psychology. Someone with 5 or 10,000 XRP might feel average because they're comparing themselves to screenshots on social media. In reality, they are part of a tiny global minority. The problem isn't their position, it's their reference point. This is why so many strong holders sell too early. They don't realize how rare their position is. They see a price double or triple and think it's the peak because emotionally it feels significant. They forget that infrastructure assets often move in stages, not straight lines. We've seen this pattern before. Early Bitcoin holders felt small compared to miners with massive balances. Early Ethereum holders thought 1,000 ETH wasn't enough when whales were dumping during market dips. Many sold early and later realized they were far better positioned than they believed. XRP holders are going through the same emotional cycle now. The market is quiet. Price moves are slow. Headlines come and go. That creates doubt. But beneath the surface, the distribution tells a very different story. The biggest risk is not having a small bag. The biggest risk is giving up your position because you misjudged where you stand. Selling too soon because of boredom, fear, or comparison has ended more wealth-building opportunities than bad assets ever did. As you move higher into the top 1%, the numbers become even more extreme. The amount required is significant, but the number of real individuals at that level is tiny. Most wallets there are tied to operations, not personal wealth goals. The few individuals who truly sit at that level are exceptionally early by any global standard. This is why the rich list should not intimidate you. It should empower you. It shows you how concentrated real positions actually are, and how few people are truly holding through the build phase. It's crucial to talk about control and security because this is where theory meets real-world results. Holding XRP isn't just about bag size, it's about ownership and self-custody. The reality is, no matter how early or well-positioned you are, if your coins sit on exchanges or custodial platforms, you face real risks that can erase years of accumulation overnight. History has repeatedly shown us the dangers of leaving crypto on third-party platforms. Think of FTX, Mt. Gox, Celsius, and countless smaller failures. Even early adopters with significant holdings lost everything because their coins were not in wallets they controlled. This is a painful but important lesson. If you want to stay in the game long-term, self-custody is non-negotiable. Cold wallets, hardware wallets, secure offline storage are not optional. They are your shield. They eliminate counterparty risk, freezes, forced liquidations, and sudden access issues. In short, they turn your XRP from an IOU into actual ownership. The truth is, the next wave of XRP adoption will not come from retail hype. It will come from structural demand. As tokenization of real-world assets ramps up, XRP will serve as the backbone for instant settlement across borders. Banks, asset managers, and payment providers are quietly testing and integrating XRP because it solves real operational problems. They need fast, cheap, reliable settlement layers. This isn't speculation, it's practical necessity. This shift has profound implications for individual holders. As demand from institutional and operational use grows, liquidity in open markets will shrink. Exchanges will face tighter regulations, operational wallets will lock up supply, and real human holders will suddenly control a relatively rare resource. This is not about price pumps. It's about positioning in a system that becomes indispensable. The scarcity created by operational demand will naturally elevate the value of XRP over time, independent of retail sentiment. Here's another nuance many people overlook. Time and patience are your real edge. Early adopters who understand distribution and hold through sideways markets are the ones who benefit most when utility and adoption accelerate. Retail investors, impatient with short-term fluctuations, often sell just as the quiet accumulation phase ends. XRP's current stage mirrors what we saw with early Bitcoin and Ethereum holders: quiet infrastructure build, slow adoption, overlooked by mass media until the system becomes necessary. The key takeaway here is that your personal position, whether it's a few thousand or tens of thousands of XRP, matters much more than comparisons with operational or institutional wallets. Those wallets are not your competition. They are part of the plumbing that allows the network to function. Your advantage lies in time, discipline, and strategic accumulation. This is also where mindset plays a massive role. Most investors are terrible at exponential growth thinking. They panic when things move slowly, doubt when headlines go quiet, and chase when hype appears. The winners are those who maintain perspective. They understand distribution, secure their assets, and ignore distractions. They add consistently when others hesitate. They avoid emotional traps that shake out weaker hands. That's how small to mid-tier holders can control substantial influence in the ecosystem over the next several years. Finally, let's talk about exclusive positioning. Even modest holdings today place you in a global minority. When the network scales, trillions in tokenized assets will flow through XRP. The early, well-positioned holders, those who remained patient, maintained custody, and ignored emotional noise, will have unique leverage in this system. They won't need millions to benefit massively. Even mid-tier bags can translate into real influence and opportunity in a financial ecosystem built for efficiency and global reach. The moral here is simple. Stop comparing yourself to operational wallets or hype-driven mega holders. Focus on securing your keys, understanding the real distribution, and maintaining discipline. That's the mindset and strategy that separates successful early holders from those who panic too soon. It's time to zoom out and look at the big picture. Why XRP isn't just another crypto, but a potential cornerstone of global financial infrastructure. Understanding this changes how you view your position, your risk, and your opportunity. XRP was built for speed, efficiency, and scalability. Its purpose is to bridge value across borders almost instantly, without requiring pre-funded accounts in every currency. This is not speculation, it's engineering. When tokenization scales, trillions of dollars in real-world assets, stocks, bonds, commodities, real estate, will need fast, compliant settlement. Traditional rails like SWIFT simply can't handle that volume efficiently. XRP can. That's why banks, payment providers, and asset managers are quietly integrating it. They don't need hype, they need solutions. As this infrastructure grows, the supply dynamics will shift in a way most holders underestimate. Operational wallets, those huge whale addresses we talked about earlier, will lock up XRP to meet institutional and liquidity demands. Exchanges will increasingly comply with stricter rules, restricting open market access. The result, retail access shrinks while operational demand rises, creating natural scarcity. This scarcity isn't artificial, it's structural. And early human holders will benefit the most because they are the scarce counterparties in a system that becomes essential. Most XRP holders don't realize this because they focus too much on price charts or social media hype. They see sideways movements or minor dips and panic. But infrastructure doesn't move in flashy cycles. It builds quietly until adoption reaches a tipping point. At that moment, growth accelerates rapidly, not because of speculation, but because alternative systems are too slow, expensive, or fragmented. XRP's role as a high-speed settlement rail means it will be demanded out of necessity, not curiosity. This is why patience is the ultimate advantage. People who sell at minor price spikes often regret it later. They forget why they got in, not for quick flips, but for positioning in a system that will underpin trillions in global value transfer. The emotional traps, comparison, FOMO, panic, are constant threats, but they only matter if you let them dictate your actions. Successful early holders focus on securing their assets, adding strategically, and ignoring short-term noise. Another important aspect is wallet strategy. Long-term holders often split their XRP across multiple addresses for security and privacy. This reduces risk and adds flexibility, but it also means that raw wallet counts can exaggerate the number of real humans holding large positions. The truth? Tens of thousands, or maybe even fewer individuals control meaningful stakes at the top levels. On a planet of billions, that's a tiny, elite group. If you hold even a modest bag today, you're already in that exclusive club. Perspective changes everything. We also need to consider the historical pattern of early adoption in infrastructure technologies. Amazon, Google, early Bitcoin, and Ethereum all went through long, quiet periods where early adopters felt bored or uncertain. Those who understood the system's potential, stayed the course, and held through sideways markets eventually reaped enormous rewards. XRP is in that quiet phase now. Partnerships are forming, regulatory frameworks are aligning, pilots for tokenized assets are expanding, all behind the scenes. Retail often misses this because they expect constant excitement, but real systems build silently until they are indispensable. This is why understanding distribution, securing your keys, and maintaining patience are more important than bag size. You don't need to own 1 million XRP to benefit from structural demand. Even mid-tier holders can wield significant influence in a world where operational and institutional wallets dominate supply. Your advantage lies in timing, self-custody, and strategic accumulation, not chasing the next hype pump. Finally, remember this. The window to accumulate meaningful amounts at current levels will not stay open indefinitely. Once operational and institutional demand ramps up, liquidity will compress, and the early holders will control access to a critical financial rail. Those who understand this reality, secure their holdings, and ignore distractions will be positioned for one of the rarest opportunities in crypto history.